10 assets that will make you rich. In this present day and age, people understand that wealth isn't all about money. Sure, money is one of the most fluid and accessible forms of wealth, but it remains a small part of what has become a much broader concept. For example, nowadays, in calculating a person's net worth, the sum total of all their assets is considered rather than just cash. And so, what are these assets and how do they contribute to your wealth? In this video, we discuss 10 assets that will make you rich. These are valuable properties that you can leverage to meet financial commitments, debts, and other obligations. Before we dive in though, please make sure to like, subscribe, and turn on notifications. These gestures are an excellent way to support the channel so we can keep coming at you with excellent content. First off, what are assets? Well, assets are individual or organization-controlled resources that can generate value or be converted into cash. These include things like property, investments, businesses, and franchises. As an individual, possessing these gives you an extra layer of financial security. Also, seeing as they can be converted into cash, this fluidity will allow you to serve whatever needs you have better than the assets do in their present form. With that as an overview, why don't we get right to the list? At number 1, we have cash. When it comes right down to it, cash deposits are still a type of asset, particularly when they are in the trust of some financial institution. Banks or other wealth management firms can keep your cash for you and can even advise you on how you can soundly spend it. Cash is a means of trade, and this implies that it can be transformed into various other types of assets to suit different needs. This fluidity is an excellent benefit of cash and is why many people like to keep some amount on hand. Even if you do not need cash immediately, putting some away can prove financially shrewd years later. Just make sure you keep inflation and other market variables in mind. Number 2, real estate. Real estate is a tricky one because a lot of people hold incorrect assumptions about it. Sure, you may own a house, but that doesn't make it a real estate asset. The home you live in is more likely to be a liability because you do not generate rent money from it. Instead, you lose money on fixes and other maintenance expenditures. For individuals to make money from real estate, there's an active way and there's a passive way. The active way is with rent collection, in which you could lease out available rooms to tenants. For most, this isn't too difficult an accommodation to make. As for the passive way, it involves capital appreciation, meaning that if you keep your house in decent condition, its value will appreciate over time, potentially earning you a significant profit in resale. Number 3, stock. With investing becoming as mainstream and accessible as it is today, there is no excuse for a financially responsible adult not to own stock. Maybe you don't understand the market, but several resources exist to teach you. If that's still a barrier to you, many financial firms exist to advise you on how to put your money in the stock market. Now, you don't necessarily have to involve a traditional stock trading firm. Instead, you may employ stock trading apps such as Robinhood, E-Trade, Fidelity, TD Ameritrade, and Interactive Brokers. These platforms are pretty intuitive to use and, coupled with other financial education, could make you a formidable trader. Number 4, bonds. Bonds are a sort of financial instrument which represent a debt between an investor and a borrower. This borrower is usually a corporate or governmental body, and these bodies typically use bond money to finance huge developmental projects. Then, through varying structures, they pay back to the debtors with added interest. How much you earn from bonds is usually expressed by a parameter known as bond yields. These are defined as returns realized on a bond, usually expressed by percentages or interest. They have no fixed value, rather than can be calculated in different ways using such variables as the initial price of the bond or the bond coupon price. Number 5, mutual and index funds. Index and mutual funds are a type of asset which operate within the stock market. Even so, they differ from traditional stock trading. Take index funds, for instance. These are mixtures of stock that mimic the performance and composition of actual stock market indices. Mutual funds are similar, however, they are actively managed to ensure that they maintain the best possible performance over time. Mutual and index funds are worth looking into because they usually require low expenses. Even so, they can provide solid long-term benefits. Number 6, royalties. As assets, royalties are a type of income generation tool which benefits individuals like artists, writers, and musicians. This type of payment is given out for repeated uses of an individual or company's assets. For example, pop music sensation Taylor Swift made $14 million in royalties from 3.5 million sales of her new album. Also, the author of the Harry Potter franchise, J.K. Rowling, has made at least $1.15 billion in royalties from her book sales, which have generated as much cash in sales as $7.7 billion. Therefore, for those in these types of businesses, royalties are a significant cash-generating asset. Number 7. Businesses and franchises. Businesses and franchises are great examples of assets. These could be restaurant chains or fashion brands or blockbuster movies or primetime television. These enterprises have 3 main ways of generating money. First, through their standard business model. For a business like Burger King, this would be from the sale of burgers and so on. Second, through royalties, meaning that certain parties could purchase the right to use the brand name to set up a similar business. And then third, through an outright sale. For example, the creator of Star Wars, George Lucas, sold his franchise to Disney for $4 billion, making him a billionaire. This cash generation variety shows how profitable all businesses and franchises can be under the proper management. Number 8. Raw materials and commodities. This category of assets covers a wide variety of elements. Regardless, it should be a no-brainer why they all fit together, as they can all be traded in for cash. Examples of these include gold, jewelry, watches, luxury cars, and expensive paintings. These are all tangible assets that can be interacted with in physical space. However, there exists a subcategory that contains assets of a digitized nature. These include items like cryptocurrency and NFTs. Each of these subcategories has its own advantages and disadvantages. Even so, the money they make is still legal tender. Number 9. Self-created products. As an individual, you're capable of generating value out of thin air. This value could be in the form of a business venture or a creative endeavor. In this day and age, assets are created more than discovered. Don't count yourself out of having a billion-dollar idea. Take the brand Gucci, for example. Founded in 1921, the company is now one of the most recognizable fashion brands worldwide. In 2019, it pulled in a revenue of $11.74 billion. Funny how this legacy all began from the mind of a poor Italian hotel doorman. Number 10. People. This is one asset that is often taken for granted and hardly invested in. However, its inclusion on this list should convince you to change your mind. People are perhaps the best asset to invest in. By doing this, you could form strong bonds and relationships which will pay dividends over years and years. This advice isn't to say you should try to purchase favors from people. Instead, make sure your intentions are genuine. That way, you will be repaid in ways you hardly imagine. Coming to the end of this list, we hope you have identified certain critical assets into which you could put your money. Owning assets is all about extending and even multiplying your value. Do you think there's an asset missing from this list that we ought to include? Please let us know below. As we sign off, we'd like to remind you to leave a like, subscribe, comment, and share if you liked the video. Our videos are always exciting and engaging, and you wouldn't want to miss out on the next one. Till then, take care of yourself. Catch you later.